One SARS SMS can turn a normal business day into instant stress. You're busy with clients, staff, suppliers, and cash flow. Then your phone lights up with a message from SARS. Suddenly, everything else feels less important. But the real danger is not the SMS itself. The real danger is how you respond in the first few days. Quick transparency note before we continue. I am Sia's digital twin, here to explain business and tax issues in a simple way. The real Sia created me and wrote the technical parts of this script while he is busy helping clients in the accounting practice. Now let us be honest. When a business owner gets a SARS SMS, the first reaction is usually panic. Is SARS saying I owe money? Did I miss a return? Is this about VAT, PAYE, income tax? Is this a final demand? Is it a verification request? And sometimes, because the SMS itself is short, it creates more fear than clarity. That is the first mini lesson. A SARS SMS is not the full diagnosis. It is a warning light. When the warning light comes on in your car, you do not start replacing random parts. You first check what the problem actually is. The same applies here. Step 1. Do not ignore the message. Ignoring SARS does not make the problem disappear. It usually gives the problem more time to grow. But also, do not rely only on the SMS wording. Log into the official SARS channel, preferably eFiling, and check the actual notice, letter, statement, or request. The SMS is only the alert. The real detail is usually inside the SARS profile. Step 2. Identify the tax type and period. This is where many business owners make the wrong move. They just say, SARS is after me. But SARS may be referring to VAT for 1 month, PAYE for another month, company income tax, provisional tax, dividends tax, or another compliance matter. You need to know exactly which tax type and which period SARS is referring to before you respond. Here is where most problems happen. Two businesses can receive similar SARS messages, but the correct response can be completely different. One business may simply have an outstanding return. Another may have a real unpaid debt. Another may have been selected for verification, and SARS wants supporting documents. If you treat all three situations the same way, you can make the problem worse. So step 3 is to separate the issue into 3 buckets. A missing return means SARS is waiting for a submission, such as a VAT 201, EMP 201, ITR 14, or IRP 6. An unpaid debt means a return or assessment may already exist, but the amount has not been paid. A supporting document request means SARS wants proof behind what was submitted. That could include invoices, bank statements, payroll records, VAT calculations, or other documents. Before we go further, if you have received a SARS notice, demand, or compliance warning, and you are not sure what it means, do not wait for the situation to escalate. Use the link in the description to schedule a free consultation with us. We can help you check what SARS is seeing and what your next step should be. Now, step 4. Do not reply emotionally and do not submit random documents just to send something. This is a big mistake. A rushed response can create more confusion. First, reconcile your records. Check your bank statements, check your VAT calculations, check your payroll, check your SARS statement of account, check what was submitted and what was actually paid. Let us use a simple example. A business owner receives a SARS SMS saying there is an outstanding compliance issue. The owner immediately thinks SARS is wrong, but after checking eFiling, they discover 3 separate problems. The March VAT return was submitted, but the VAT payable of 18,500 rands was never paid. The April VAT return was not submitted at all, so SARS shows an outstanding return. Then one EMP 201 was submitted late, and penalties and interest of 2,100 rands were triggered. So, was SARS wrong? Not necessarily. The issue was not one simple problem. It was a mixture of unpaid debt, a missing VAT return, and late payroll compliance. That is why reacting from emotion is dangerous. The SMS created the panic, but the records explained the real story. Now, step 5. Decide the correct response. If the return is missing, the response may be to prepare and submit the outstanding return. If the amount is correct and the business can afford it, the response may be to pay. If the amount is correct but cash flow is tight, SARS allows taxpayers to request a payment arrangement in certain cases. If the amount is incorrect, The response may be a dispute or correction. But notice the order. You do not start with payment, dispute, or panic. You start with understanding. Check the notice. Identify the tax type. Find the period. Reconcile the numbers. Then respond. Also understand the different types of SARS communication. It could be a demand for payment, a final demand, a verification request, a request for supporting documents, a notice of assessment, an admin penalty notice, or a tax compliance status warning. Each one needs a different response. And here is the part business owners need to take seriously. The biggest mistake is waiting until SARS blocks your tax clearance, appoints a third party, or escalates penalties before taking action. By then, your options may be fewer, your stress may be higher, and the cost of fixing the issue may be bigger. So the practical takeaway is simple. A SARS SMS should trigger a proper review, not panic, avoidance, or rushed submissions. Verify the issue, understand the period, check the numbers, then take the right action. If you have already received a SARS SMS, notice, demand, verification request, or compliance warning, use the link in the description to schedule a free consultation with the PTY guy. We will help you understand what SARS is seeing, what the issue may be, and what your next step should be. Because one scary SARS SMS can point to several different underlying problems. The SMS is only the entry point. The real work is checking the records behind it.